Yo, what is going on, everyone? Welcome back to the channel. My name is Jason, and today I want to give you a beginner's guide on how to easily trade options on the Robinhood app. I'm going to go through the app step by step, teach you what exactly an option is, both sides of option strategies, whether you're buying or selling options, and the different types of options. There's call options and there's put options. So I'm going to explain to you the difference between the two, what exactly an option strategy is, and how to exactly buy or sell these options on the Robinhood app. Let's get into it. All right, investors, before we get into this video, if you could do me a huge favor, hit that like button, subscribe to the channel, and help us get into that YouTube algorithm so we can get this video out to as many stock traders as possible. Thank you so much. Let's do it. First, I want to explain to you guys what exactly an options contract is. In its simplest terms, options allow you to buy and sell contracts that grant the right but not the obligation to buy or sell an underlying asset at a predetermined price known as the strike price before a specific date known as the expiration date. Options contracts are valued based on how likely an event is to happen. If the price of the stock rises, so does the value of the options contract that allows an investor to buy that stock at an initial set price. The worth of a contract is also determined by time value. The more time there is for price movement, the greater the chance of an option contract allowing an investor to benefit from that stock move. For example, a 4-month contract would hold more time value than a 1-month contract. The first thing you want to determine as an options buyer or seller is which one you want to do. Do you want to be a buyer of options or a seller of options? If you're a buyer of options, you don't necessarily have to own the stock. But if you're selling like calls per se, you need 100 shares of a particular stock. If you're selling a put, you need the cash to cover 100 shares of a particular stock. Say you want to buy a stock that's at $7. So you're going to need $700 of capital in order to sell that put option. I'm going to explain to you real quick the 4 types of beginner option. On the screen right now are the 4 different types of option contracts that most beginners start out using. You can either be a buyer or a seller. On the buying end, you have the right to buy a particular stock at a certain price on a particular date. If you're buying puts, you have the right to sell a stock at a particular price on a particular date. Then, on the opposite side, you have the seller of these contracts. In order to sell calls, you need to own 100 shares of a particular stock. Say you want to sell calls in SoFi. Then you need 100 shares of SoFi in order to do this. And then you have the obligation to sell those shares at a particular price on a set date. Okay, now we're going to move on to selling puts. Say you want to sell puts on SoFi at the $7 strike. So that means you have to have enough capital to cover 100 shares at the stock price, say it's $7. So you would need $700 in order to sell the put. And this is the obligation to buy a said stock at a particular price on a particular date. Real quick before we fire up the Robinhood app and actually do some of these contracts, I want to tell you guys why I use these particular strategies. Buying a call means you think the stock is going to go up. Buying a put means you think that this particular stock is going to go down, right? And when you're doing your research, say like Warren Buffett buys some Sirius radio. Then you're like, oh, this stock might go up in the near future in the next year or two. So I'm going to buy some call options on Sirius XM, the stock that Warren Buffett just bought. Now I want to move on to the selling side of options. There's a lot more risk when you're selling options as opposed to buying options. Whatever premium on your little Robinhood app, whatever that number says, that's the most you can lose. And remember, say an option says 45 cents. You got to multiply that by 100 and then you get $45. So the max you could lose is $45. But when you're selling calls, say I own 100 shares of SoFi. I bought it at $7, right? I want to sell the covered call for $10 6 months from now. So that means no matter where SoFi is, if it goes to $100 a share, I still have to sell my SoFi shares at $10 on the strike date 6 months from now. So it could go to the moon, and then I'm, shit out of luck a little bit. But I do this strategy on stocks that don't have a lot of volatility, that aren't going to run up crazy, and that I know really, really well. Okay, now about selling puts. So I like to do this strategy. Say I like SoFi. It's trading at around $7 a share right now. But I want to sell a cash covered put at $5. So I need $500 of a collateral, because at $5, you times that by 100 and you get the $500. So I need $500 to be able to sell this contract. I love SoFi, and I would love to buy it at $5. Say I do a contract 6 months from now. So in 6 months from today, I want to buy SoFi at $5 per share. I put up my $500. They also pay me a little premium. Say it's like $30. So my break even minus $30 from 500, that's $470. Divide that by 100 and you get $4.70 is my break even point. So as long as SoFi is above $4.70, I will make money on this trade. But the risk is, say SoFi explodes and blows up, Anthony Noto quits, and the company goes into the dumpster. In 6 months from now, I still have to buy those 100 shares at $5, even if SoFi goes to $1. So I could be out $400 in that particular instance. So you got to gauge your risk and understand which one of these strategies works best for you. Okay, now let's actually trade some options. For all my beginners out there, the first thing you want to do is decide what stock you want to buy or sell your option on. For us, we're going to do SoFi Technologies, ticker symbol SOFI. Then, whether you're on the desktop or on your phone, you're going to click on Trade SoFi Options. And then this options chain is what this is called. Like I said before, there's buy and sell, calls and puts, and an expiration date right here, right? So we're going to buy some options today, and we're going to buy calls instead of puts. So we got to pick an expiration date. We want to give SoFi plenty of time to go up. Unfortunately, the farther you go out, the more expensive these options get, right? And with all the headwinds that are happening macroeconomically, with interest rates, we want to go out pretty far. So let's see January 17th, 2025. All right, everyone. The strike price is on the left, $7, $8, $9, $10. As the price goes up, the ask price goes down, because it's a lesser chance of us hitting these options, so the amount of premium you have to pay goes down. Right next to that is the break even. I like this $9 strike. So our break even is if SoFi on January 17th, 2025 is above $9.88, we will break even or make money. If it's below that, we will not hit our strike price and we will lose our premium. For this particular options contract, it's 88 cents times 100, that's $88, right? And if you look over here, our max profit is unlimited, because SoFi could hypothetically go up and up and up and up and up, and we can make a lot of money. With buying call options, you only have a loss of what your premium is. The max loss we can have is $88 on this trade. So no matter what happens, the most money we can lose on this trade is $88. Our break even is $9.88. So anything over $9.88 is all profit for us. And if we don't get to $9, we will lose out on our premium of $88. SoFi is trading at $6.95 right now. So we have to go up 42% in the stock price in order for us to make money by January 17th 2025. Now that we've picked the option that we want to do, we put in the ask price of 88 cents. It'll be more likely to be filled, and there's a little small fee of 3 cents. So you hit review order, submit, and boom, you're all set, guys. It's after hours, so this is not going to fill. It'll say one of one contract purchase once the actual call option goes through. And that is how you buy options on the Robinhood app. Thank you guys so much for tuning into this video. If you have any questions about options or options trading strategies, leave them in the comments below. I'll be happy to answer any questions that I can. I appreciate you guys for tuning into this video. Let's go SoFi! Peace!